The 2026 tax cliff is officially dead. While everyone predicted your taxes would skyrocket this year, a massive new law just did the opposite. You aren't just saving money, you're looking at a complete financial launch. Here's how you're getting a space-age raise from the IRS.
Welcome to the future of space travel. And by space, I mean the extra space in your wallet. Today is February 10th, 2026, and the IRS has confirmed the final numbers for the tax year. Forget the gloom and doom of the TCJA sunset. We have a whole new landscape to navigate. For years, experts warned that 2026 would bring higher rates and smaller deductions. But thanks to the One Big Beautiful Bill Act, or OBBBA, those 2017 tax cuts didn't just stay, they evolved. We are seeing some of the largest inflation adjustments in decades.
Let's start with the big one, the standard deduction. This is the shield that protects your income from being taxed at all. For 2026, it has been boosted significantly to keep up with the cost of living. If you don't itemize, this is your first major win.
Here are the verified numbers. Single filers now get a deduction of $16,100. Married couples filing jointly, you're looking at a massive $32,200. And for heads of household, that figure jumps to $24,150. More of your money stays in your pocket before the IRS even takes a look.
But it's not just about the deductions. The IRS has widened the tax brackets themselves. Think of your income like a rocket climbing through different atmospheric layers, each layer or bracket taxed at a higher rate. In 2026, those layers are much further apart.
We are keeping the 7 marginal rates, ranging from 10% to 37%. However, the 10% and 12% brackets received a special 4% inflation boost this year. This means thousands of more dollars are being taxed at the lowest possible rates compared to last year.
For a single taxpayer, you won't hit the 12% mark until you cross $12,400. Married couples stay in the 10% zone all the way up to $24,800. These thresholds are designed to prevent bracket creep, where inflation pushes you into higher taxes, even if your buying power hasn't changed.
Now, let's talk about the itemizing revolution. For years, the SALT cap, state and local tax deduction, was stuck at a measly $10,000. That was a huge blow to homeowners in high-tax states. But in 2026, that cap has been blasted open. Under the new law, the SALT deduction limit has been quadrupled to $40,400 for most filers. If you have significant mortgage interest, property taxes, or state income tax, it might finally be time to ditch the standard deduction and start itemizing again for massive savings. High earners take note. That $40,000 cap does start to phase out once your modified adjusted gross income hits the $500,000 mark. But for millions of middle-class families, this change alone could be the biggest tax break of the decade.
Let's shift gears to your investments. Capital gains in 2026 are looking incredibly favorable. If you've held an asset like stocks or crypto for more than a year, you are dealing with long-term capital gains. And for many, the tax rate is exactly zero.
If your taxable income stays below certain thresholds, roughly $47,000 for singles or $94,000 for married couples, you pay 0% on those investment profits. Even above that, most people only pay 15%. This is the ultimate strategy for building long-term wealth. Wait, there's a new 2026 senior bonus. If you are 65 or older, you can now claim an additional $6,000 deduction per person, regardless of whether you itemize. This is part of the Working Families Initiative within the OBBBA to protect retirees from inflation. And for those still in the workforce, there is a temporary provision for 2026 that excludes a portion of overtime pay and tips from federal income tax. If you're a service worker or putting in extra hours, the IRS is finally letting you keep more of that grind money.
So, how do you win in 2026? Strategy is everything. Step 1. Maximize your 401k and HSA contributions. These pre-tax dollars lower your taxable income, potentially keeping you in a lower bracket and qualifying you for that 0% capital gains rate.
Step 2. Review your SALT.
If your state and local taxes exceed $16,000, the new $40,000 cap means you should likely itemize on Schedule A. Don't leave that money on the table just because you're used to the old $10,000 limit.
The bottom line, the IRS just gave the American taxpayer a flight plan for success. Higher thresholds, bigger deductions, and expanded itemization mean you have more control over your wealth than ever before. 2026 isn't a cliff, it's a runway.
Summary for the 2026 season. Standard deductions are up to $16,100 for singles and $32,200 for couples. The SALT cap is now $40,400, and long-term capital gains remain the best way to grow your money tax-free. The future is bright.
If you want me to deep dive into the specific bracket tables or show you how to time your capital gains to hit that 0% rate, drop a comment below. Don't let 2026 pass you by without a plan. I'll see you in the next one.
Disclaimer: I am a professional producer, not a tax attorney. Always consult with a certified tax professional before making major financial decisions. Your mission, should you choose to accept it, is to save as much as possible.